China just told its tech giants to stop buying Nvidia chips and accused Nvidia of breaking its antitrust law. Nvidia, of course, just dipped in stock price, so is this the crack in the armor or a setup for an even bigger run? In this video, I'll show you exactly what actually changed about the company, the real revenue at risk, and a simple game plan that you can use today. China's internet regulator ordered leading tech firms such as ByteDance, the creator of TikTok, Alibaba, and others to stop buying Nvidia's China-specific AI chips, notably the RTX Pro 6000D and previously the H20, as Beijing pushes domestic alternatives. And now because of this, testing and orders were halted for the company. Almost simultaneously, China said in a preliminary probe that it found that Nvidia violated some of its anti-monopoly law. This is in addition to Western scrutiny from the EU and the US Department of Justice, who had inquiries last year. Luckily, the ban plus the probe does not mean that the game is over for Nvidia investors, but it does mean that the China lane just got a big bright red light. The important thing to note here is the revenue that's really at risk for the company. For Nvidia's last quarter, which was for the fiscal year 2026, we're talking about revenues of around $46.7 billion, which included $41 billion in data centers. Management specifically said that there were not H20 sales to China that quarter and guided the next quarter to be around 54 billion. And historically speaking, China was as high as 20 to 25% of the company's data center revenue. Recently, management said that China is expected to be mid-single digits, which is a much smaller size of the pie today. Translation: losing China does hurt for the company, but not like it did in 2023. In the fiscal year 2025, we found that China still represented 13% of the company's revenues, but the trend, of course, has been going down. And in the newest quarter, it had zero H20 sales to China. This context really matters. In summary, so far for the company, China went from a key growth lane to a small but noisy lane. And the headline risk that all these different media companies are publishing is bigger than the actual revenue share for now. But the core thesis for Nvidia has not vanished. In fact, what we found is that Blackwell ramped shipments of the B200 and the GB200 systems are scaling significantly in 2025. Third-party trackers expect Blackwell to be greater than 80% of Nvidia's high-end shipments this year, and this is really the core and the engines of guidance. Hyperscaler demand remains broad, with AWS, Microsoft, Google, and Oracle committed with large contracts and high demand for the company's products, which definitely helps to diversify away from China. HBM supply is expanding, which will help significantly to support the next generation of GPUs and to help Nvidia to keep shipping products. Now, the reality is that the risk didn't completely disappear. We're still talking about the EU and the US scrutiny, which continues for the company. The competition with AMD, still a real threat. And the customer concentration, particularly for these large mega buyers, needs to continue to be watched. But the product cadence and innovation is still pounding the drum. Before I share exactly what this means for the company's stock price, I just want to share that all of the numbers that you've seen on this video so far, they come from Y-Sheets, and this is a platform that works on Excel and Google Sheets where you can just enter a company ticker and then get all of the company's financial statements like this. But most importantly, you can set up custom formulas on Excel like like this that allow you to easily compare companies like how you're seeing right now and create valuation models like the one you're seeing right now, where you simply just change the company ticker, change the assumptions, and automatically you're going to get the present value per share. Going back to the company, we have three different potential scenarios. We're talking first about the bear case, and this is if the China ban sticks into 2026, the antitrust actions escalate, and hyperscalers slow down their purchases and shift more into in-house or custom silicon production. The base case is where China contributes little in the near term, but the Blackwell ramp as well as the company's new innovations help to offset the loss of this revenue, and revenue guidance continues to expand moving forward. And lastly, we have the bull case. This is a scenario where there's a workaround with China, or there's a potential trade-off that allows the company to sell back its products without little to any restrictions. On top of that, the faster Blackwell adoption kicks in, and this generates additional upside and revenue that the consensus does not expect. Now the question is, what should I do about Nvidia stock? And this is just my opinion. If you're a long-term investor, I would focus on the product cadence and the capacity, not necessarily the headlines, because they're gonna come and go. Here, what you wanna track is the shipments of Blackwell each quarter, HBM availability news, and any kind of regulatory milestones that allow the company to sell more product with less restrictions. If you're a tactical investor, expect choppiness around the China headlines and the antitrust leaks, and use strategic entries on pullbacks when headlines spike fear, especially if Nvidia iterates the supply and demand strength and the company's new products make up for any kind of losses in revenue. The main red flags that you really need to keep in mind is if there's any multi-quarter delay of Blackwell or any company guidance on lower supply for its different parts. Number two, adverse antitrust remedies that cap pricing or force unbundling at scale. And then lastly, HBM bottlenecks persisting into Rubin. Currently on my model, which again I use white sheets to get data for, you can see that I estimate the current value of the company to be around $177 per share, which right now the company is currently trading for $170. So there is a little bit of upside, but do keep in mind all of the analysis and the things that I mentioned to you. Now, I'd love to hear from your perspective what you're doing about Nvidia stock now. So let me know in the comments below. And if you want my valuation spreadsheet, just comment valuation and my team will share it with you. I'll see you in the next one.